so we're now recording. So today's session, we're going to be taking a look at disposals in our first 30 minutes on the advanced bookkeeping section. And then we're going to be taking a look at incomplete records in the last 30, continuing on from final accounts. So this is going to tie into what we covered last week when we had a brief look at depreciation and then markup and margin. We're just now going to expand on that a little bit more. And again, we're going to have a chance to have a practice question on each one. And again, hopefully we'll have some time to answer some questions as well. So jumping straight into disposals. So obviously the process of disposals is relatively straightforward in terms of what it is. You know, over the lifetime of a business, we acquire lots of different non-current assets, and naturally there will be a point that those assets will be disposed of or sold. It is just sort of the natural cycle of the business, and it's something that we really need to take into consideration when we're talking about a business in the wider context of its life, essentially. So what we need to do is make sure that when we dispose of an asset, that all the components of it are removed from our books. As this asset is now gone, we can't have any records of it in the books because it's an unfair reflection, for better or for worse. So in terms of what we will be looking to remove, we'll be looking to remove the original cost of the non-current asset, any accumulated depreciation that relates to said asset. We'd also consider any part exchange allowances, and again, we'll be taking a quick look at that tonight. And then we're also going to calculate any profit or loss that is made upon disposals. So when we look at disposals in its overarching theme, this is essentially what we're doing, these 4 steps. Now, in essence, the concept seems quite straightforward. The bookkeeping can sometimes trip up a few people because we have to consider other aspects. The AAT will rarely give you all the information you need. You may be asked, or you will more than likely be asked, to find out certain figures, aka you might have to calculate the depreciation before it is removed, or so on and so forth. So we're going to jump straight in and look at the double entry bookkeeping. For the moment, we aren't using figures, but we will get to that shortly. So when we're looking at the appropriate steps we need to take, the first one we always want to do is remove the cost of the asset. Now, when we talk about the cost of the asset, we mean the original cost. So if we paid £10,000, it doesn't matter how many years into the future we've gone, that £10,000 will still be the figure that we need to remove from the cost account. So in order to do that, as you can see, the correct double entry will be to credit the non-current asset at cost account and then debit our disposals account. And if we sort of apply some logic to this, it's simply we're reversing the original transaction. When we first purchase an asset, we will of course record it as a debit because it is an asset to us, the business. Now we are removing that asset. Oh. Okay, perfect. So apologies for that. So as I was saying, we're going to essentially be reversing the original transaction. So again, when we originally acquire an asset, we're going to debit the non-current asset at cost account because we are increasing the asset, the value which is owed to the business. And then obviously, well, I'm going to flip that. We need to reduce the amount which is in this non-current asset at cost account because we don't own the asset anymore. So that's the first step we need to take. And again, when we're working in the disposals, we're going to debit. You will see as we work through this process, a lot of entries are going to sort of filter into this disposals account from various angles. So this is sometimes where people sort of trip up because they're not sure which side of the disposals account they need to be working on. But the logic that we need to apply, or that we're going to apply, is if we understand one side, and the best side we want to be working on, again, is the opposite side to the disposals, then we can associate the correct entry just by the simple rule of double entry. And an example of that is if we look at the next one, which is removing accumulated depreciation. So again, if we think about when we originally record this, the accumulated depreciation account is classed as a liability. So when we originally record entries into it, it's going to be a credit entry. So now when we come to dispose of the asset, we don't own the asset anymore. So we don't keep the value of that depreciation on our books because it's a liability that we no longer need to incur. So quite a handy little rule you can do for this is essentially, I mentioned it last week when we were talking about recording depreciation. Now you can use it in the same aspect here as well, which is, it's essentially called the double D rule. So again, we're going to debit depreciation, which in this instance is the accumulated depreciation account. And then again, just by the rules of double entry, we know that the corresponding entry, aka on the credit side, has to be in the disposals account. So this bit is relatively straightforward. People are quite okay with this bit. It's when we start looking at, for example, part exchange allowances and stuff like that. So let's just keep moving on with this. And again, we're going to account for any sales proceeds. Quite straightforward enough. So we're going to debit the bank to signal any money coming into us. And again, by the rules of double entry, we're just going to credit the bank account. And then for the final one, we're going to balance off the disposals account to determine the gain or loss on disposal. Now, again, this is quite tricky for some people when you first look at it. It's just a practice repetition. The more you do this, the more comfortable you'll get. So what we're looking at here is the balancing figure. So I need to point that out quite quickly to you guys. These aren't two separate entries into a single account. This will be the balancing figure when we've put all these other entries in. We've removed the cost, we've removed accumulated depreciation, we've accounted for sales proceeds, so on and so forth. The balancing figure, if it is on the debit side, it signals we have made a profit. If it is on the credit side of the disposals account, it signals that we have made a loss. So again, don't get mixed up and think this is two different accounts. This is just what your balancing figure in the disposals account will be. Okay, so that is disposals in its easiest form when we don't have to worry about a part exchange allowance. And it's relatively more straightforward than the counterpart, but because this is the AAT and sometimes they like to make it a bit tricky, we also need to consider what happens when we have a part exchange allowance. And just in case anyone isn't aware, what we talk about when we say part exchange allowance is essentially when we are acquiring a new asset, but as part of that, it's a mixture of cash and the part exchange of another asset. So for example, if you were using a car, so you might go and buy a new car, but you will use your old car as part exchange to basically get some funds towards the new car that you're buying. So it's the exact same trail of thought that we can apply here. So let's just have a look at the double entry quickly. So we're going to complete the first two steps as normal. So when we're looking at part exchange allowances, the inclusion of depreciation and the removal of the cost, they are done exactly the same. Nothing changes on that account, so we don't need to be concerned about that. What we do need to do is look at the two separate sections. So again, it looks like a lot, but you'll see in a minute when we sort of put this picture together, we're essentially just making another entry. So when we're talking about a part exchange allowance, we're going to debit the non-current asset cost, and that is for the new asset. And then we're going to credit the disposals account. Now, what I mean by that is when we're talking about the allowance specifically here. So for example, if we're given £5,000 as a part exchange allowance, that will be debited in the new assets account and then credited to our disposals account. And then we're just going to carry on as normal. And we also need to consider any cash we may pay towards this new asset alongside the part exchange. So to do that, quite straightforward for you guys at this point, I'd imagine. We're going to debit the cost account again, and we're going to credit the bank. So fundamentally, what we're doing here really is just splitting the value of this asset two separate ways. If you look at the entries that we've made into the new non-current asset at cost account, the amount is going to be the same. So if we paid £15,000 in cash outright, we'd just record it as a single entry. We'd debit the new asset account £15,000, we'd credit the bank. All we're doing here is essentially just splitting it into two. So the only difference is let's say we've got 10,000 to come out of the bank, 5,000 via part exchange. The balancing figure in that new asset account is still going to be £15,000. So like I said, we're just adding another string essentially. So what I'm going to do is just to let you guys have an example of this, is I'll pull my worksheet up for you, and we're going to have a work through a bit more of a practical example. So can I just check again? Can everybody see this, please? So it should say question 2. Okay, my chat is going very slow. Yes, can see it. Fantastic. My chat is getting very big, actually. Okay, wonderful. So let's have a look at this question. Let's break it down into its components. And this, again, this isn't too dissimilar from the sort of thing you may be asked to do in your exam, because what we're going to have to do first, when you see in a moment, we're going to have to calculate the depreciation first. So I'll read the scenario out, A company buys a machine on the 1st of April, let's say 2007, for £56,000. The machine has a useful life of 8 years. On the 31st of December 2009, the company decides to upgrade its machine and purchases another machine on that date. It pays £47,000 in cash and receives a part exchange allowance of £35,000. So the company has a year end of the 31st of December 2009 and prorates depreciation on the year of purchase and in the year of disposal. So I can't see. Oh, the question disappeared. Oh, I do apologise. Let me pull it back up, guys. Sure. I don't know how that's cut off. Okay, can you see it again? I do apologise. I have no idea why that cut off then. Yeah, thanks, perfect. It might be because my chat box is going a little bit crazy tonight, I will be honest with you. I'm not sure why it's doing it. It's not scrolling down. I've just got an incredibly long list for some reason. But okay, so let's have a run through this question. Let's break it down into different sections. So the first thing that we're going to need to do is calculate our depreciation charge, because we need to make sure we have the right amount of accumulated depreciation to remove. Okay, so it's asking us, first of all, the net book value. So what it obviously means by this is the value of the asset on our books when it's disposed of. So we need to consider different components here. So first of all, we need to find out what the annual depreciation charge is. So in this instance, we've got the value of our asset, which is £56,000, divided by 8 years, which is what we were told is the useful life. And that should give us an answer of £7,000 per year. So that is our annual depreciation charge. However, as always with questions like this, we need to make sure we read very carefully what the question's telling us. So a couple of things to point out. First of all, the date we purchased the asset on, which was the 1st of April. And we've also been told that we prorate depreciation in the year of purchase and the year of disposal, which now means that for this first year, we have to account for the actual time we owned the asset. So in this instance, from the 1st of April to the 31st of December, we're looking at a total of 9 months. So what we're going to do now is just break this depreciation down. So we're going to do £7,000. We're going to divide that by 12 months. And we're then going to times that by the amount of applicable months, which in this instance is 9 months. So that, if done correctly, should give us a figure of £5,250. So in the first year, we now know what our depreciation is, and that includes the 9 months. Now for the next 2 years, that is obviously all of 2008 and all of 2009, we know that there's going to be an annual depreciation charge of £7,000 in both. And we are aware of that because as we saw on the date of disposal, I'll just scroll up and show you quickly. The date of disposal was the last day of that financial year. So we've taken into account a pro rata when we purchased the asset. There's nothing we need to consider upon the removal. So in this instance, we now simply have an annual depreciation charge of £7,000. We're simply going to times that by 2 years. And of course, that's going to give us an answer of £14,000. Now, in this instance, all we're going to do now is just figure out our total, which is quite straightforward. So we've got £5,250, add £14,000, which would give us a total of, if my calculator serves me correctly, just have check the chat for the answers. Let's have a look. 19250. Yeah, fantastic. So a couple of people have picked it up. That's great. Again, just want to make sure my screen's still sharing. I am worried. I'm conscious that it may cut it off when I check the chat. So I do apologise if I'm not checking the chat too much, guys. I don't want to keep cutting the screen off to you all. So yeah, as we can see there, that gives us a total of 1,900,250. So we've now figured out the amount of depreciation. So in this instance, what we're now going to do is essentially reduce this off what our original asset amount was. So that's £56,000. Take away 19,250, excuse me, which would give us an answer of 36,750. So that is our net book value. Perfect. So these sort of questions are important. We're not, you may be thinking, well, we're not doing disposals yet. What are we actually doing? You'll see in a second how this ties in, because like I said, very rarely are you asked to sort of do all this at once. You will sort of be asked to calculate depreciation and then tie it into the larger picture. So let's look at the next part of the question. So we've been asked, is there a profit or loss on disposal now? Relatively straightforward. In this instance, we're now going to compare the amount that we have just shown or calculated. We're essentially just going to compare that against the amount we sold the asset for. So if we just scroll up and check the question again. So we know we received a part exchange allowance of £35,000. So when we compare the two, it's evident that we have made a loss of £1,750. And when we come to fill in the disposals account, you'll see how that links together. So let's move on to the double entry. So this is where we now can sort of tie this together a little bit more. Okay, now I want to just make sure that we can get through the accounts properly. So we're now going to use the figures above to remove the asset, and then obviously we'd balance the accounts as appropriate. So let's have a look at the accounts we're going to be working in first. We've got the machine equipment cost account. We've got our machine equipment accumulated depreciation, and we've got our disposals account. So if we look back at those original steps, the first thing that we need to do is remove the cost of the original asset, which was £56,000 as we've been told. And a good indicator of that is we can see on the balance brought down, that was the original value. So we're going to credit the machine equipment account. We'll try to write my neatest in these small boxes, and that's going to be for the full cost of what we originally paid for the asset. And then of course, move down to our disposals account. Then on the debit side, the exact same entry. Okay, so that's step one. Simple enough. And then step two, accumulated depreciation. So again, kind of handy in these questions because we can see that what our balance brought down was, that is the figure that we're going to remove in these instances. So again, to remove accumulated depreciation, we're going to debit our depreciation account. So again, debit entry into the disposals. That's going to be for 19,250. And then of course, I'll just scroll down just so you guys can see it a bit clearer. In the disposals account, we're going to look at the accumulated depreciation. For the exact same figure. Okay, so that is the simple part. Now we start looking at part exchange allowances. Things get a little more convoluted, perhaps get a little more tricky. So let's just very quickly revisit the question and just highlight some key figures here. So we're looking at the fact we've been paid, or we have paid, £47,000 in cash, and we've received, of course, the part exchange allowance, which we now know of, £35,000. So these are the next two entries that we need to record into the account. So let's start with the £47,000, paid in cash. Now, in this instance, we aren't given a bank account to work in, so we're only working on a single side of the double entry. So when we're recording, as you guys know, we're going to obviously credit the bank to signal that money going out, which means, of course, we're now going to debit our machine equipment cost, the amount that we have paid. So reference of bank, and that's going to be, of course, the £47,000. Okay, and then of course, if we did have the bank account on here, we would then just credit that. So now we've got the part exchange allowance. So again, let's strip it down into its simplest form. We need to make sure that value is included in the cost account of the new asset. So in that instance, we then know we aren't paying all this on a single entry. So in this instance, it's going to be the disposals account. And that's going to be for £35,000. Then, of course, we'll move down to the disposals account. Credit entry, so machine at cost again. For the exact same amount. And that is fundamentally it. So again, don't get tripped up on this part exchange allowance. Just imagine, in essence, that we're doing two separate payments. We paid forward £7,000 out of the bank, and then the other £35,000, we still need to make sure that value is included on the new asset. And then we can sort of confirm what we've done here by balancing this disposals account. So again, we know the largest amount is on the debit side. And if you punch these figures into your calculator, you should see that our balancing figure, which is going to go to the profit and loss, should be £1,750, which then gives us, of course, our balancing figure. And again, we can confirm that. We've looked at our previous work and we've seen that there's been a loss on disposal, should we cross the profit out, of £1,750. So that is fundamentally how we do disposals. It gets over complicated when people consider the part exchange allowance, but like I said, it's about breaking it down into those individual components and then working through it from there. So I'm going to stop sharing my screen for a second because I just want to make sure I can catch up on the chat, because like I said, I believe that when I'm sharing my chat at the moment, it is it's cutting off my screen share, so I don't want to make sure that I'm missing anything. So I can just see, again, Claudine, Sarah, some answers in the chat that we've got it. That's absolutely fantastic. And yeah, as you can see there, Sarah, you can see where we have put it in its T account form. So we have extended these sessions, but it still feels like it's gone really quick. So that is the 30 minutes that we're allocating to advanced bookkeeping. I've got a handful of people in the waiting room that I'm going to let in, and then we're going to move on to the final accounts, and we're going to be looking at incomplete records tonight. So you are more than welcome to stay. If you're covering both, if you're on the synoptic, for example, please feel free to stay. If you're only here for advanced bookkeeping, you are more than welcome to leave. Please don't feel obliged to stay, but like I said, stick around as long as you want. So I'm just going to let a handful of people in, and then I'm just going to get the next PowerPoint ready. Okay, that's some more in. That's fantastic. And then we're looking at incomplete records. Okay, brilliant. That's everybody let in. So again, we're going to move on to final account. So I'm going to start sharing my screen again. No, I don't want to go right to the back. Excuse me. Complete records. Let's have a look. There we go. Okay, so yeah, moving on to incomplete records. So we're essentially doing a continuation of what we covered last week when we had an admittedly brief look at markup and margin. We're now going to see how that ties into the larger topic of incomplete records. Now, this will appear in some capacity in your final accounts exam. And again, it is down on the list of things that will possibly arise on the synoptic. So it's in truth, again, once we break it down into its individual components, its bark is a lot worse than its bite, and we're just going to go through that and hopefully just emphasize that to you guys. So just to sort of rehash the obvious, as you can see there, from time to time, pieces of information may be missing from a company's records. In these instances, it is sometimes possible to reconstruct missing information based on the information that we already have. So what this essentially means is, you know, we're all human, things disappear, computers go bust, you know, information just isn't always, despite our best efforts, securely stored and easily obtainable. In the instances that some things go missing, we can put steps in place to essentially find it. So in an exam application or in an application which is perhaps more relevant to you guys on FAPI, we're looking essentially at if we're missing adequate records on things like sales, purchases, VAT. What we can do is use the information that we do have to fill in the gaps. So for example, you may be given an opening balance, a closing balance, and then any other information that might be relevant. So if it's our credit customers, it might be the amounts we've received from our customers. It might be the amount of new credit sales we got from customers. And then vice versa with purchases, might be the amount we've paid or the amount of new credit purchases that we've taken on. So what you'll essentially be given is 3/4 of a table, and you just have to find the missing figure. So just to give you guys a practical example of what I'm talking about here to make it perhaps a bit more approachable, is this isn't too dissimilar from the sort of question you might be given. So a business has the following information available in respects to its sales ledger control account. So we have a balance brought down at the end of December 2018. We have a balance carried down at the end of December 2019. We've also been told that payments received from customers equals £38,700. And essentially what we've been told is to find the missing sales figure based off this information. Now, in essence, the simplest way we do this is draw out the sales ledger control account, draw out a T account, put these entries in, and then again, we're going to find the missing figure. So before I get the answers up, I'm just going to leave this up for a minute or two to let you guys have a go at it. So like I said, draw out a sales ledger control account, put in these entries as you normally would, and then you should find that you're missing a big figure, and that should be the sales figure. So I'm going to give you guys a minute to have a go. If you have got the answer, just put it in your chat. If you don't want to put your answer in and wait for us to go through it, then that's absolutely fine. Okay, looking good. So we have had some answers in the chat. So let's fundamentally see if we are right. Okay, so we should have had a sales figure of £39,238. So like I said, in order for us to get to this figure, we're going to draw out the T account and put in the entries as we normally would. So we know, for example, the balance brought down is at the beginning of the year, which will be on the debit side, because again, we're working in the sales ledger control account. It's an asset account. It signals the money that our customers owe to us. And then the balance carried down is of course going to be what should be the balancing figure come the end of the period. Now in this case, what we're essentially doing is finding another balancing figure. So the key element here is what we've been told, which is the payments received from customers, which in this instance is 38,700. So when we are originally going to record this entry, of course, we're going to debit the bank account to signal the money coming in. We're then going to credit the sales ledger control account to signal a reduction in the value of our assets because we're not owed this money anymore. So we need to reduce the amount that we are owed in this account. Now, when we're sort of presented with this information, just so you guys are aware of how you sort of fill in the dots, just get my pen up very quickly. Is you're simply going to do, you've obviously your 38,700, add your 1,985, your balancing figure, which of course gives us the total, which is, as we can see here, 40,685. So what we essentially need to now look at is how do we get the figure on our debit side to equal the same amount. And again, you will only ever be told of a missing entry. There's not multiple gaps that we have to fill here. So we know what the balance brought down is. So we just need to find the difference. So 40,685. Again, if you take that from your 1447, you're then given your balancing figure of 39,238. So you could argue in essence, we're just balancing the account in a different way. And that is really sort of convoluted as these get. So this is one of the two ways that this can appear in your exam. However, sort of tie this in with last week, you may also be asked to use markup and margin. But Claudia, yeah, that's fine, Claudia. You can do it the other way around. That's absolutely fine. If you have your own specific method, I certainly don't want to rock the boat. Do it as a T account. Yeah, that's absolutely fine. So I would probably encourage you to draw out the T account. It's just obviously in PowerPoint. It's not always particularly easy to get them on, but that is the sort of logic that we need to apply here. So let's tie this in with what we covered last week, shall we? So in your exam, again, you might be asked to find a figure using markup and margin as your solution. Now, these ones are quite common, and if you do use anything on the AAT's learning portal, like the green light tests, for example, which I actually won't go to pull one of them up because they have a very good example. These are the sort of questions that you do get. So when we're working through these, excuse me, we're going to be given, again, a set of figures and then told find the missing information. So what we may be asked to fill in is any of these figures here. Now, ultimately, we'll be provided, we'll be told that our markup or our margin is a certain percentage. We will be told about the information, so we'll be given amounts for certain entries, but then we might be told the sales figure is missing. How do we find it? So again, you won't be asked to calculate more than one or anything like that. It'll be a simple figure. It'll be the sales, the purchases, whatever it might be. That is what we will be tasked with finding. So I'm just going to give you guys a second because this table is essentially a walkthrough of how we are going to do these calculations. And I would encourage you heavily, anytime you get sort of presented with these sort of questions, scribble out this table. It is unbelievably helpful and it just makes it a million times easier. And we're going to pull up an example in a moment and you'll see how that works. Like I said, I just want to make sure everybody has time to scribble this down. You don't have to draw out the table. If you just want to sort of scribble opening inventory, purchases, less closing inventory, it's absolutely fine. But this is fundamentally in its own right the most bulked up version of it. So just like that. So I'm going to pull up in a brief second the question I'd like to show you online. Okay, so for anybody who hasn't seen these before, this is the AAT green light test. So I'm going to assume that you guys are pretty familiar with these. If you haven't used these before, as your student member, you have access to them on your learning portal. They're really quite useful, to be honest with you. I'd encourage you to take a look at them. Very, very useful, especially when you're coming up towards your exam. It's essentially, it spits out 10 random questions. And each time you redo these, it picks from a different pool. So you will see the same question more than once. However, for what it's worth, we won't see the exact same 10 questions in a row. So I'd encourage you to have a look at these if you already haven't. So I want to use this one because it's quite a good example of how we can apply markup and margin and we begin to fill in this missing information. So I'm going to read the question out. So we have a partnership that applies a uniform markup of 18%. So short and sweet, they have an 18% markup. Don't let uniform or anything like that throw you off. In this instance, that is our markup. The closing inventory for the year ended 30th of June 2014 was 16,250. And for the year ending 30th of June 2015, 17,520. If the purchases for the year ending 30th of June 2015 were 188,420, what was the gross profit for that year? So we've had a lot of information thrown at us from a lot of different angles here. We've got a couple of dates to consider as well. So again, if you're feeling confident, just have a swing in the chat. But we are going to break this one down and run through it together. So the first thing we need to find, obviously, is our opening inventory. So in order to get that, we need to carefully check these dates. So we've got the 30th of June 2014, 30th of June 2015. So it's safe to assume that our opening inventory figure is going to be £16,250. And again, the next thing we need to find, as if we reference our table, is purchases. Now again, quite straightforward in this instance, purchases for the year ending 30th of June were £188,420. So we're then going to add that on. And now we're going to make sure we find the closing inventory. Now, by the process of elimination, it can only be one other figure, which is 17,520. So these three together form our cost of sales. So the formula, as again, you'll probably be familiar with at this point, is our opening inventory, add our purchases, less our closing inventory. So we punch all those into our calculators. You should be coming out with a figure of 187,150. And I will scribble this out momentarily. I just want to also talk through it to let people have a chance at doing it themselves. So we've now figured out our cost of sales. So from that, we can use Markup in this instance to calculate what our total sales are. And of course, if we can figure out what our total sales are, we can take one off the other to come to our total profit. So again, in this instance, we've been told that it's a markup of 18%. I can see Nelly and Sarah in the chat have already got it, which is absolutely fantastic. So what we are going to do is when we use markup, again, as we looked at last week, what are we being asked? Are we being asked to calculate the cost of sales? Or are we being asked to calculate the sales figure? Now we've just worked out the cost of sales figure. So we're now going to use that to work out our value of sales figure. So what you want to do in your calculators is punch in that cost of sales, £187,150. We're then going to divide that by 100 times by 118, which if you remember from last week is 100% plus our markup. So that's 187,150 divided by 100 times by 118. Now, that should give you a figure of £220,837. So we've now figured out our sales figure, which is great. And this is something you need to be semi-aware of. Don't trip yourself up at this point. Do all the hard work and then put the wrong figure in. We've calculated the value of sales. That's fantastic. But make sure we answer what the question is actually asking us for. We aren't asked to provide the value of sales. We're asked what was the gross profit. So like I said, don't get this far and then slip up on a really, really easy mistake to make. So to find out the gross profit, again, at this point, it's just quite simple mathematics. We're going to basically deduct our sales figure off our cost of sales. So that's 220,837 less the cost of sales of 187,150. And that will give you your gross profit, as some people in the chat have already collared, of 33,687. And what I will do very, very quickly, the reason I haven't drawn it on the screen at the same time is to give people a chance to answer. And because my computer really doesn't like it, I try and draw on a web browser. So I'll just pull up a Word document and just scribble out those calculations for you guys, just so you can see them. So let's have a look. Yeah, so Nelly's absolutely nailed it. That's fantastic. And I'll swap my screen over to the Word document. Okay, so again, let's work out those figures. So I'm not going to write out the table in its explicit form, but we can simply abbreviate in this instance. So we've got our opening. I'm going to change that to red because I hate writing in black on this computer. It stresses me out. Is the pen working? Come on, pen. There we go. So we've got our opening inventory, which, as we were told in the question, £16,250. Next, our purchases figure. And again, I'm just going to put a P for purchases just to keep it short and sweet. £188,420. And that is going to be less our closing inventory, which again, I'm going to abbreviate. So I'm going to put this in brackets just to signal it is going to be a minus figure. And that figure was 17,520. Which, if we put all of them together, comes the cost of sales of 187,000 150. So again, we're just thrashing out some maths in this instance. So I'm just going to scroll down a bit so I've got a bit more wiggle room. Okay, so we're now going to figure out our value of sales. To do that, again, we're going to take our cost of sales, divide it by 100, and then multiply it by 100 plus the markup we are taking, which is in this instance is 18%. So of course 118% in total equals 220,000 and 837. So again, just by using markup, we've very quickly established what the value of sales is, and because the question's asking for gross profit, it's simply a case of deducting one from the other. 220,000, 837, less our cost of sales of 187,150 gives us a gross profit of 33,687 pounds. And that is our gross profit. And that is fundamentally it. So you can see there how the inclusion of markup and margin affects these questions. Now, like I said, when you are given these, you won't always be asked to calculate specifically sales. You may be asked to calculate what the purchases figure was. So it's essentially about jiggling the numbers around a little bit. But fundamentally, as you can sort of see here, we're just thrashing out some quite basic mathematics. It's not over convoluted. We're not looking at a wide variety of information. It's just about making sure we remember to do the finer details right. Like I said, for example, making sure we take off the closing inventory when we're working on our cost of sales, making sure we apply that markup or margin calculation correctly. Like I said, make sure we know what figure we're working towards. And then, of course, making sure we know what the question is asking for. Is it the gross profit? Is it the value of sales? Or is it something entirely different? It's fundamentally what it comes down to. So, yeah, I've got this in my synoptic. I forgot how to calculate. It is, I can understand why again, the mathematics itself isn't the tricky part. It's the process which sometimes seems a little bit long-winded and a little bit over-convoluted in truth. So like I said, if you do get one of these, just break it down into its simplest format. Always refer to that table. As this is a recorded session, and when you get the recording, if you need to pause it, write that table down, and then I just say thrash out as many of these as you can, and then before you know it, you'll be drawing up that table in your sleep, and you'll be filling these in at the speed of light, to be honest with you. Very, very good marks to get in your FAPR exam or in your synoptic. You know, if you can nail this, they're really, really good marks to pick up. Okay, guys, so that is everything we're scheduled to run through tonight. I'm conscious that we started a tad early, so I'm just going to see, just take a couple of minutes. If anybody's got any sort of general questions about anything, I will try and get through as much as I can. If I can't answer it now, I do apologise. But yeah, if we're sort of done with the tutorial now, if you don't have any questions, you're more than welcome to leave. I'm just going to give people a couple of minutes to see if there's anything you do want to ask. So do they know when the exam centre will reopen for exams? Okay, so this is a question we're getting asked a lot at the moment. It is fundamentally, it's coming down to the exam centres themselves. So the government guidelines at the moment basically state that a centre can remain open. It is dependent on the centre, not its geographical location. It's fundamentally coming down as the size of the building, its ventilation, its overall safety is the key factor here. So some centres are open. All we can sort of encourage people to do at the moment is, of course, just check with the exam centre. Now, obviously, some of ours are open, some aren't. And again, if it is an external centre, unfortunately, all I can really say is if it isn't one of our FI centres, you need to contact the centre directly. see, A, are they still open? B, are they taking bookings? So as far as our centres go, I can tell you at the moment, and again, this might change because, just with the way things are at the moment. At the moment, we have Norwich, Cambridge, Chelmsford, Leeds are all open at the moment, and that did include synoptic bookings for February. But like I said, things are changing quite quick at the moment, so I can't say for definite. So please don't sort of, get worked up if the centre has changed. It's just about also the safety of you guys. So Anise, can I sit a synoptic in first intuition? I'm not your student. Yes, you can. You can use the centres if you aren't an FI learner. In the current situation where capacity is reduced, FI learners are taking priority because obviously there's quite a lot of them, so we need to make sure that they have somewhere they can access and sit their exams. But if there is capacity, you will be allowed to sit there. You can basically contact your nearest centre and they'll be able to let you know about their availability. Will the recording be? I believe the recording will be sent out to you. If it doesn't arrive, you can just ask for it and we'll get that copy sent out to you. So I'm going to really wrap it up there, guys. So obviously I can see a few people have left and said thank you, so that's really kind. So just so you guys are aware, for next week, again, we're going to keep the same format. 6:30 till 7 is going to be advanced bookkeeping. We're going to be looking at the non-current asset register. And then 7 o'clock till 7:30 is going to be sole trader accounts. And that's obviously on the final account side. So I hope this format, it's just made it run a little bit smoother than last week. Again, I appreciate it got a bit hurried when we were trying to go through markup and margin. So I hope this just sort of extra time has just made it a bit more clear for yourselves. And like I said, we'll be here next week. It should be me again. Hopefully Ian will be back and we'll be able to join the session soon, because I think, he's a fantastic tutor. I'm really looking forward to seeing what he does with the sessions, and I think you'll all really value his input. So he will hopefully be back soon, but in the meantime, we'll keep on going through these. And like I said, we'll be starting at 6:30 on advanced bookkeeping, and hopefully I'll see you all there again. So thank you for your time, guys. Enjoy the rest of your evening, and like I said, keep yourself safe, and I'll hopefully see you all next week. Take care.